All right, welcome everyone. Thank you so much for joining us today. Today we have two special guests from Global Capital Markets, and we will be talking about values-driven entrepreneurs and investors, the new way deals are getting done. So let's introduce our speakers here. So we have Mark S. Whistler. He's the co-founder and principal of Global Capital Markets. We have Sean Flynn. He is a principal at Global Capital Markets. We have Dr. James B. Beatty, U.S. Capital Partner, as well as our strategy officer. And then we have Charles Vital, our managing partner, and myself, Vanessa Guajardo, our marketing director. So let's go around quickly and introduce ourselves, talk a little bit about our backgrounds and how we got to where we are today. So let's kick it off with Charles. Charles, who are you?
Who am I? Okay, U.S. Capital Global Managing Partner, joined the firm 14 years ago. My background was actually in charity and family offices, so allocating assets to drive yield for impact investment. So first, asset investing, drive yield, and then make the impact investments, either in contributions or in other impact investments. So worked for a few foundations, joined Jeff, and got into alt asset management and all asset allocation and banking. Specialty $5 million to $500 million transactions, private credit fund, have a global footprint. So been a good ride, and I continue to ride the waves through 08 and then also COVID, some really interesting golden opportunities that we have been riding in terms of investments, alts, non-bankable assets, and credit and equity.
Perfect. Thank you. James, tell us a little bit about yourself. You have a very interesting background as well.
So diverse, I guess. I spent about 20 years in tech, working for different Silicon Valley firms. And then I joined my friends, Charles and Jeff, because once you've done Silicon Valley, then you do venture funding. And increasingly, U.S. Capital was looking at technology-based deals. The market, in this century is now driven by technology. The NASDAQ is tech heavy. And the practice of financial marketplace has become fintech, combined with market tech and reg tech, but increasingly the technology is applied to packaging, marketing, distributing, understanding the deals, and creating the marketplace. And there's values associated with how you go about doing that in terms of the financial values, the due diligence associated, the extrinsic values, and does this deal fit the strategy of the investors or the financing market?
Well put. Thank you. Let's hop over to Mark. Mark, tell us about yourself.
Yeah, good morning. Mark Whistler, Global Capital Markets, middle market M&A focused investment bank. Personally, I'm originally a chemical engineer, went back to Harvard Business School, got an MBA, worked in the Northeast for a strategy firm on M&A deals, maximizing shareholder value for Fortune 200 companies. Moved to California in the 90s and founded Global Capital Markets to really provide those same sophisticated services to middle market private businesses. And so we've built the firm up to 15 registered reps, 15 bankers, and we focus on companies with revenues between 5 and 200 million. 75% of the practice is sell-side M&A. Of those, half of those deals are our clients are bought by strategic buyers, and the other half are majority recapitalizations with private equity firms. And then we also do some capital raising and some buy-side search work. But I'm delighted to be here today and talk about the changing world. So thank you for having me.
Yeah, thank you for being here. And last but not least, Sean. Sean, who are you?
Okay, so thank you for letting me be here. Just like Vanessa, I'm an Oakland A's fan, so let's go A's. grew up in the East Bay, mechanical engineer undergrad. After that, I traveled a little bit. I lived overseas for about 8 years total. Most of that time was in China, where I started a couple companies. One did okay, exited, came back to the US in 2013, got involved with an angel group. From there, I got involved with a global incubator focused on artificial intelligence and blockchain. So I was organizing delegations back and forth between here and China, helping companies set up overseas operations, get introduced to overseas investors, both in China and from Chinese companies over here in the Valley. Did that for a number of years, and then most recently onboarded at Global Capital Markets, where I'm really excited to work with Mark, Steven, Connor. That we have an amazing team there, and every day I'm just learning knowledge from their experience. So it's been a great opportunity, and I'm really excited to be here and to talk about what's going on nowadays.
Perfect. Thank you. All right. Well, I will show the audience really quick, and I did pull it up for a second. Just our 2 websites. If anyone wants to stalk us while we're talking here, feel free to. So globalcapitalmarkets.com is Mark and Sean's information landing page. And then if you come over to uscapglobal.com, this is myself and Charles and Dr. James Beatty. So click around. We have a lot to look at here, as well as Global Capital Markets. But let's switch over to our topic. And so yeah, value-driven entrepreneurs and investors, the new way deals are getting done. Yesterday we kind of did a run through, and we had a lot of great ideas of what we could talk about. So let's start it off. Charles, do you want to lead us into our main topic?
Yeah,
Exploring entrepreneurs, investors, adopting value-based approaches to business and investing?
Well, the big question is, and this is Mark and I were having a good discussion, and it is for the audience here, which are issuers and investors. The question is, does it matter? Doesn't matter? And you get those headlines between, if it's Elon Musk headlines with Tesla surrendering cryptocurrencies because, it has an impact, negative impact, right? The SEC task force, when it comes to the ESG disclosures requirements for big market, kind of mega market kind of companies, large cap. How does that affect the middle market? Does it affect valuations? Does it affect the way the middle market does business with its deal makers, its attorneys, its bankers, its investors? Yes or no? I think it exaggerates valuations in a deep way, yes. But I like to kick it off, especially Mark's on the front, quarterbacking a few of the deals in the middle market. Is there an impact here fundamentally?
Charles, that's a great question. It's an interesting question. I think it's one that I see it as something that's significant, but it's behind the scenes. I think that in the middle market, where you've got private investors and private equity firms and also private company buyers, they're ultimately looking for what will all this have to do on the bottom line. That's one impact, and the other impact is what might it do to our company to position it for a potential acquisition by a much larger company that might have these ESG reporting requirements. So really it can affect it in 2 ways. A lot of these things ultimately are good for business, okay? If you treat your customers well, if you're good for the environment, consumers and customers and corporate partners respond positively to that. So I think much of it is relatable and it has an impact on the bottom line. If you have people that are working for you that believe in the mission of the company, they're going to do a better job for your company. They're going to do a better job for your company's customers. And so a lot of it ties back to just how effective is the business. But I will make a distinction in the private company. I think that while big public companies sometimes have the resources to divert some resources just to check boxes or to address things for public relation purposes, the smaller middle market companies, market cap below 200 million, they have to remain more focused on the economics, because that's their investors, are not investing, as far as I can tell, they're not investing for the purpose of, general social good. While that's a great thing to see, they need a return on their investment. And I think those attributes are, come more to play for the smaller and middle-sized companies than they do the large public companies.
So life cycle then has an impact then on this then really for the businesses life cycle. So let's say the early stage, VC stage, seed stage, having a big idea, dream, using more of the right brain, but the right brain with some metrics to commercialize, right? A vision to commercialize, but having a right brain of what's the mass market is key. That's values driven. However, once you hit a certain, let's say EBITDA, once you hit revenue, once you hit middle market stage, then James and I were discussing yesterday, it comes to a point where you don't want to mess it up. And then when you're then have a liquidity event, IPO, then not messing it up is also being cautious like Enron or BP or Tesla of ESG items. So maybe what I'm hearing is it's impacted by the life cycle of the company. Earlier stage, it's probably material to have an appropriate values-based leader or vision for the product, services, etc. Middle market, don't mess it up, is what I'm hearing. Late stage, obviously it matters. Is that?
Well, I mean, could I add something right there? I mean, you really kind of have to set up the company at the beginning with that in the back of your mind, because you can't really change all these processes and all that when you're in hyper growth mode. I mean, you had mentioned VCs right there at VC stage. I've had 2 conversations in the last few weeks with people raising ESG specific funds right now, $100 million funds focused on that. And their thought of it is, well, 1, opportunities in the next few years, all startups are going to have that in the back of their mind to be fundable. But 2, also they're thinking that through ESG, through implementation of different practices, they'd actually be able to be more competitive in the marketplace. And their visions are, not 6 months, their visions are 5 years from now, like the whole growth of this company from when they invest in that early stage to as they mature. So I think ESG, that thought process, is going to become more prominent in investment in these earlier stage companies moving forward in the coming years. But I mean, as Mark was talking about, just the bottom line for that middle market, I mean, those are numbers. You're looking at the numbers.
Okay.
Well, to Mark's point, also what you touched on, Charles, these extrinsic values, ESG, have 2 different dimensions, if you will, or 2 extremes on the continuum. Is this good stuff people are looking for? And does this thing avoid bad stuff that people are understanding there's potential risk associated with? And so the check boxes may be, check, I've got a positive value statement for the marketplace that's related to my technology and industry. And B, I avoid some of the checks that might imply additional risk associated with the industry, the products, et cetera.
Yeah.
Okay.
And you see in certain industry segments, big companies are divesting, assets that are out of favor, but those assets will continue to generate income, and they're taken on by an investor group that has a different appetite, that doesn't have a public profile, wants a good return, and is happy to get a higher return because of this political risk or kind of being looked down upon. Say it's coal mines, right? They're complying with the regulations. They're not doing anything illegal. Yet they're substantially far enough out of favor that the public companies might divest them, but there's private investors that want to pick up that excess return associated with an industry that's out of favor. So, it's it depends a lot on, and now there's funds that focus on, obviously they focus on certain segments of ESG investments, and they cater to investors that are willing to pay a premium for those investments.
So
And,
risk, so the risk is adjusting too. Then we're seeing a risk with regards to even ESG risks is being accounted for, and these commodity type, like if it's coal, dirty energy, whatever it is, and
Yeah.
therefore investors are rewarded more for
They
that.
they can get a higher return because they're low profile. They're not getting public exposure. But there is a risk that they're undertaking that the government could accelerate its regulatory oversight to impose greater costs on them, or potentially at some point put them out of business. So that there are kind of logical reasons for the risk, and then there are PR related reasons for the extra return.
I think this
And
implies
Charles, I think, sorry,
two
James,
other
I was going to say, instead of being rewarded, you know, you could look at it as just they're being rewarded a little bit differently. Whereas that reward for some might only be financial, some might be financial, but environmental plus feeling good. It's just a different, where that reward is in that spectrum. Sorry, James.
Two other dimensions of Sean, the two other dimensions of the phrase values, if you will. We've been talking about financial value, the balance sheet, the revenue. We've been talking about the ESG and or potential negative impact of a particular industry or products, but there's also the value of, which Mark, you just touched on, the strategy of the investor. How am I planning on making money? And much as there's a radically different horizon and value between millennial investors in the marketplace and retiree investors, there are a range of strategies that are create certain types of values for investments. People that are focused on high income from energy is a particular value strategy.
All right.
And then behind the scenes is the values of the financial supply chain, if you will. The valuation and audits, the lawyers, the brokers, the dealers, et cetera. How do they work together? How do we know each other to be able to provide a deal that brings the partners together, brings together the offering, the issuer, and the investors? And I think that's a separate set of values, is can I work with these people? Do I trust these people? So values plays in many different dimensions in the overall supply chain, if you will.
So you're talking about, James, you're talking about values amongst deal makers, the professionals.
Exactly.
Values with the deal professionals, do those matter? And if they're quote unquote trading on the account, or traders, transactional, or are they investor centric, where they have relationships where they continuously have the reoccurring buy side relationships they continuously work with and are committed with, and so they know deeply what's a suitable asset for them and not, right? They know the asset.
Father, yeah.
That's a good, yeah. So you find that, well, to retort, does it matter? Does it matter? Or just trade? Who cares? I think 08 taught us that, just trading. I mean, we got 100-year-old plus firms that lost their ass on that.
Yeah, well, different things matter to different people, and it's a free and open society, and there are people that gladly and willingly pay premiums for select groups of companies that meet their ethical and morals and ESG goals and objectives. And obviously there's people that are well suited to aggregate and market and be the provider of those. And there's nothing wrong with that. It's great. People are sometimes they feel good about limiting their investments to those types of companies. And they may earn. It's possible they'll earn if the degree to which that's in vogue increases during their whole period, they could earn an excess return. If the degree to which that is in vogue decreases, they could suffer because of it. But I think some significant portion of the decision matrix that those people have is not just the financial return, but it's how they feel about themselves and where their money is impacting society. Okay, And there's nothing wrong with that. I think that's a very healthy, very positive way of thinking. It's not conventional in the last, until recently, the last 10 years or so. That doesn't mean it isn't valid and perfectly fine. I mean, the one thing that represents a little bit of a danger is when you get sufficiently disconnected from, the fundamentals of cash flow over a long period of time, you are at risk of losing value. If there isn't another buyer with the same, disposition that you have, where you're willing to pay a premium or forego the cash on cash return for some period of time. Because if you think about it, all these startups that, that are kind of focusing on ESG, the reason that the financiers want to finance those deals and are willing to is because they're expecting those attributes to provide a premium on the exit 5-10 years from now, right? Well, if that kind of premium is no longer available for whatever reason, and it probably wouldn't be a financial reason, maybe it would just be a change in the disposition of the number of investors that want to pay that premium, then obviously things change in the financial marketplace. So the degree to which people are willing to pay a premium for those attributes can go up and down. We don't know whether it'll stay the same, it'll become more intense or less intense, but that will impact what the future value of it is.
Well put. Well put.
So when Mark, when you were introducing your firm,
Yeah,
you described your background and you said you had been in the 200, and then you were bringing this same perspective, technology practice, business understanding, down to middle market.
right.
And Charles, I think you know that the U.S. Capital, that's what we've done too, is bring the practices of the large marketplace down to middle market, whether that's the level of professionalism, the type of deal packaging, or the technology, and the regulators are looking to open the type of investments and opportunities to larger groups of people. You see the Reg A plus funding as being a mechanism to create broader marketplaces. So I think that what Mark, interesting in your opinion on this, that while middle market still is out front in being concerned about financial value, that increasingly these types of issues, externalities, larger strategy, et cetera, that were the purview of the larger corporations or the larger financial raises, you're seeing that same type of practice, that same type of ecosystem, those same type of discussions now in the middle market.
Yeah, to a limited degree I am, but I think it's driven by the perception of those companies thinking that on the exit they'll be paid a premium for it, right? I mean, the medium-sized businesses have, unless they get external funding, and they frequently do, but unless they do, they have the mundane issue of paying their bills and generating a decent return on whatever capital they have, and having money.
Sustainability.
Yeah, exactly. So I mean, if you can float stock at a huge premium, or you have an investor that, say you're Jessica Alba and somebody puts in hundreds of millions of dollars because they love the concept of these diapers that don't pollute the world or whatever they are, that's you're at that point disconnected from the everyday reality of having to pay bills and meet obligations, right? I mean, that's a very fortunate situation when you're endowed with that kind of capitalization, and more power to her. I mean, she's generated a public company that's worth a ton of money, and so I have the ultimate respect for that. But that's a very different dynamic than most people that own a private business, kind of in the real world or in the mundane world of, we make money by selling a product or service, at a price that's, materially exceeds our costs, and we reinvest in the business and build it kind of one block at a time. This is a different approach, but yeah.
What's driving the values though, in terms of, I mean, we're comparing the large cap with the middle market, and the middle market, aren't their enterprises dependent and driven by the large cap markets? And large cap markets are just picking up the leading indicators of supply chain management, the environment, the consumer that's becoming more and more intelligent in terms of where is my product source? Is it children in China and India making it, or what's happening here? Where's my cotton sourced, right? So is the capital markets, like community, which is part of the capital markets, society, which between retirement and consumption feeds the capital markets. Are we moving from a shareholder capitalism to more of a stakeholder capitalism? And are like the mega wealth transfer trends that are going on between male to female, which McKinsey came out with that report last year, which with $30 trillion was going to be moving, and the misalignment of values between the financial advisors at groups like Blackstone and BlackRock when it comes to male 50-plus-year-old gentlemen to female 50-plus-year-old ladies. What's their value set? They may be passionate to, I want to be in a mode of giving, like Warren Buffett or the Gates Foundation. And maybe that's trickling down to middle market family offices that have investable assets of $250 million or more, right? I'm not talking about, and some of these, they're going to put a lot of it in treasuries, and then they're going to have their passion plays. Their passion plays will be restaurants, wineries, art, museums, like that. So are we seeing, though, is this a community social trend that's then shifting the capital markets to be more stakeholder management, and then that's then shifting middle market companies potentially to, oh wait, we do need to consider our supply chain? I mean, that's part of the bottom line. Is the large cap and capital markets having an impact on the middle market?
You said a lot, Charles. There's so many different topics that it's kind of hard to respond to it. But I would say,
I'm listening to it on my digesting. I'm like, whoa,
yeah.
This is loaded.
Yeah. Again, I think the middle market companies have to be more pragmatic, just because of their source of capital is finite, and stakeholder capitalism. A company that's run, say you own a company, right? And you're running it, according to what your needs are. You are motivated to treat your customers well. You're motivated to treat your suppliers well. If some of your customers find out that you're employing slave labor in India, they wouldn't appreciate that, and you probably will be motivated to address that. Whether you choose to, address societal issues as a means with your corporate resources is really up to you. Okay, so you are morally and legally obligated to follow the laws and the regulations of the country that you're operating in. And whether you allocate your corporate resources to address other societal issues is up to you. And if you own 100% of the company, it's entirely up to you. If you do not own 100% of the company, then you should confer with your other shareholders and make certain that it's in their desire. Because I don't think a CEO's charter, who owns a business where there's 100 different shareholders and whatnot, private company, I don't think that CEO should take it upon themselves to address societal concerns that they have on behalf of everyone else's resources. And
why do you think then? This is a question I had. I was wondering, why is Jamie Dimon? Why are CEOs like that getting involved? And
I think, and actually, I was on a webinar just a couple of weeks ago, and it was a private, 400 people on the webinar, and not that he said anything that was, secret or whatever, but my own view on the large public, highly profile companies is they allocate money, a certain amount of money for public relations. It's good for them to support certain causes that have, kind of the societal interest at hand. But by and large, that's why you pay taxes, and that's why you have a democracy of citizens that try to allocate the government's communal money. When you have a private business, they are really reporting to ultimately to the shareholders, because the issue is one of what governing body is going to allocate those resources among societal requirements, right? I mean, if the company makes money executing its business plan, charging its customers more than its costs, and it garners resources, is it up to the CEO or the board, or if I'm a shareholder, how am I? What voice do I have in allocating resources toward general societal needs?
What if the shareholder views, though, like we see with this Robinhood nonsense and Tesla stock? Like, what if the shareholder views are shifting more from institutional to, and I'm witnessing it, right?
Yeah.
I mean, I'm on credit committee. It's, you got collateral, cash flow, you fit the bill. If you don't, I don't care what you do. So I get when it comes to credit investment, but I see on equity investing, there's a lot of other subjectivity items, especially in the secondary market. Not the primary market maybe, but the secondary market, you see Robinhood, Tesla, and some of the venture secondaries, you also see this too. The big plays that are happening with, if it's $20 million blocks of venture secondaries, the investors class, I'm noticing.
They want to allocate.
Kind
of
allocation. It's not the traditional institutional kind of mindset. It's more passion play. It's the blend, the boundaries between consumer stakeholders and investor stakeholders. There's like it's become gray. Look at the Apple stock. What percentage of the Apple stock really is held for? I mean, you got the pension and retirements, but then why is it also held by retail investors and financial advisors kind of pumping it over there?
Well,
so
yeah, because they have great confidence in the company's ability to generate cash flow from now till the end of time. I believe, and they also have great confidence that the stock will, for other reasons, will remain in demand, right? But if that changes, look at General Electric. So 20 years ago, General Electric, when Jack Welch left, I mean, for the prior 20 years, 1980 to 2000, that company could do nothing wrong, and it was the most highly thought of company around in terms of management training, financial reporting. I could see no way that company couldn't continue to dominate business. Now it's just been devastated. So, I mean, things change, and but getting back to the original point is in the middle market, I think you have just a prevalence of pragmatism whereby, private company owners want to follow the law. They want to, they take maybe their share of the profits and allocate them to charities of their choice, but they don't see it as as the corporate charter to address broad societal issues at their, kind of under their priorities, or what to say, just simply because. Maybe James, go ahead.
It's a very interesting definition, if you will, of values. We've been talking about the idea of these extrinsic values, reaching into mid-market, ESG, et cetera. Yeah. But there's a core value that you've been hitting on, which is fiduciary responsibility to my investors. And unfortunately, there's been lots of cases in the recent past of people breaching that, not necessarily just for having a personal agenda with respect to public good, but ignoring the fiduciary responsibility in terms of managing assets well, in terms of not self-dealing, et cetera, in terms of being a good steward of the company. And I think that is a core value. And without that one, then the discussions of the other values are somewhat moot.
Yeah, I mean, we're in a wealthy society that has a lot of discretion over some of these items, right? I mean, if there's other societies where people are literally getting a house over your head and food in your mouth and safety and all that, those are the first things, and all of that happens most most practically and most predictably in a market economy. And when that market economy becomes successful enough, it allows organizations and people to have discretion to move resources to charitable means. But if you have but the purpose of a corporation, right, owned by shareholders, if you're saying, if the five of us owned a company and I wanted to allocate money to a charity that I felt good about, you may not dispute at all the fact that that's a very valid charity and those people are deserving of money. But what about the other four of you may have charities that you personally favor? So where does that come in? Why wouldn't you want those charities to get more of the money than my charity? So you really have to. The one nice thing about shareholder value is that it has a real narrow focus on what the objective of the company is. It's to get the highest risk-adjusted rate of return on that capital, and then when the money is taken out of the company by the shareholders, they can do with it what they please. They can fund their charities. They can address societal needs. Obviously, a significant portion of that money comes out in the form of taxes to the government, whose sole job is to address these issues. And those issues, the manner in which they address them is determined by the democracy of electing congressmen and presidents and all, and having them allocate those communal resources. So I think the challenge is a practical one, where you have private enterprises, when they have the charter of the ESG, which is to a dual charter of affecting social good. By whose standards and at whose direction and by whose means do you affect that social good? Who's the person who's the person or committee that determines how all that works? That's the challenge I have.
That there are cases where public policy is implemented through regulatory efforts, not necessarily just through taxation and distribution.
Correct.
And in those cases, you're seeing, does this building have a LEED rating? Is there is this a green energy project? So the interesting aspect of that is that then the government and the associations have made those externalities objectively measurable, financially measurable, in the same way profitability is.
Yeah, I mean, the government's job is to regulate, is to impose regulations, not only just taxes, but impose regulations. And there's always the push and pull as to how robust those regulations should be. That's a push and a pull. What should the tax rate be? Should the tax rate in aggregate, it generally speaking, I think taxes run about 20%, 22% or whatever of GNP. And the fact that the government, routinely spends much more than that is why we have the deficit and the national debt. But some people think that the tax rate should be much higher percentage of GNP. Some people think it should be much lower. And obviously there's a significant, some people think a lot more money should be spent on defense. Some people think a lot more money should be spent on social programs. It's all a matter of valid debate. But I think the market economy is very efficient at allocating resources. And so, to some degree, if you try to impose what people call stakeholder capitalism, where you're explicitly taking into account all these other factors instead of implicitly, I don't know if that's going to work.
I have a question about that, because Jack, you brought up Jack Welch, which I actually admired, and I read his a long time ago. I read his, I think it was Right from the Gut, his book.
Exactly. Yep.
And he was in the 70s, 80s, and 90s. He was what you called an excellent, innovative CEO because of his management, leadership, training, creation of leaders and executives that really worked off of what I call a lot of left brain efficiencies, M&A, acquiring, cut down, 80% just slash, 20% bring up, highly efficient.
Well, they
which
call
for
him Neutron Jack because he eliminated a lot of jobs.
no, exactly. So from the 70s, 80s, and 90s, it was like an incredible stock, incredible company, and then he retired, you know, right
September
at the
10th.
peak, and then
September 10th, 2011.
Yeah, his successor takes over, and then his successor takes over, and what does he do? Right? I mean, it's worth a fifth of Tesla. The stock is pennies on Tesla stock. And then you have someone like Elon Musk who has a whole cult following because he's like a heroic CEO, right? And it seems as though he has his own value set. So I'd like to compare and contrast the values and the setting of those values between, let's say, an Elon Musk and Jack Welch, to appreciate maybe an era of the 80s and 90s, what Jack Welch brought to the era, which was necessary, efficiencies, and then what maybe a right-brainer like Elon Musk, who's potentially on the spectrum, purpose-driven kind of business, what he's bringing, and then the capital markets is in an insane way rewarding that. So how do values play into that?
Well, yeah, Elon Musk is kind of like Bo Jackson in terms of or other multi-sport athletes that the guy is, he's been successful in SpaceX, Tesla, the Boring Company. He wants to go to Mars. I mean, he's just bodacious. It's PayPal. I mean, I can't even name them all. So, I don't know what to say other than, and you can argue about the Tesla valuation. It seems outrageous. It seems like, you have to have in the future
Well, that's why I
fleets
said
of
it's a bit of a cult.
autonomous cars. Yeah, and yeah, but he is making a profit, and he is a leading electric vehicle manufacturer in the world. So what he's doing is real. Is there an outsized valuation to it? There absolutely is. Will it ultimately be justified? Is open to question. I mean,
but what values? What are his values that are driving that? Then it's obviously value driven, because look at one day he's like crypto bullish, and the next day because of energy he drops it like a hot potato. So I don't know if that's a game. I mean, it's a public relations game combined with also exaggerating the value set that he has, right?
Well, I think he is an idea generator, and he has the ability to marshal resources of smart people and motivated people and organize all that, right? Tesla, hasn't yet reached maturity, and they're going to have a lot of competition. SpaceX is doing some hugely impressive stuff. That Solar City didn't really work out, but I mean, the guy is absolutely amazing. But he is pragmatic to some degree. You see, he doesn't have a great feeling about California. Told him he's moving to Texas. He didn't like the fact that they wouldn't let him manufacture cars during COVID because he said it was safe, and he needs to make cars, sell them, and make money and pay his bills. So you saw he had very little patience for some of this craziness out of California, and I respect that. So I think he is results oriented, and comparing him to Jack Welch, that's a real head scratcher. I mean, Jack was working with a large mature company, right? And he was very smart. He was very aggressive. He optimized all the things about the business. He built GE Capital, which was provided more than half of the earnings, even though it was the analysts really said that GE was really a bank disguised as an industrial company. And ultimately, when that unwound, it was very costly. So he was a great optimizer of all that stuff. Musk is more of a real builder, and how sustainable that is in the real long term is open to question. But he's a world changer. I mean, he's changing the world in many different industries. I don't know what else to say. The guy, it's absolutely incredible.
Timing.
It's pretty funny on SNL too.
Right.
It's pretty good.
Timing is everything. In Jack's position, that intensive focus on profitability, cost control, et cetera, was essential. It was prescient to get involved in financing. And later, people, as you point out, were unwinding those kinds of things. They got into that late. Lots of people were building electric cars before Elon Musk came along, but he hit timing perfectly for this. Now it's still, you know, the final disposition of this, and in terms of his competitive nature and where it goes is TBD, but clearly he was at the right place at the right time to exploit that shift to electric vehicles and the battery technology availability, et cetera. So these values come and go in terms of their focus, whether it's cost cutting or ecological sustainability of transportation. And a key value of the leaders of the firm, small or large, is I tuned into the sustainability, the economic sustainability of this business activity, and do I have a vision for the future?
And not to go too much on a tangent there, but also I can't see Chuck Welch on Twitter or anything like that. I mean, Elon's personality, you have to contribute some of that to his success.
Sure. Oh, he's the
the shock factor.
well, the guy's
above and beyond.
charismatic. Well, my statement that he can marshal resources, get smart people to commit themselves to his cause and what he's doing.
So true.
You know,
and
he's charismatic.
Here we are in 2021 on the internet doing a webinar talking about values in financing, and that's a big shift.
It's gonna be
really
an attribute of your CEOs. You're gonna have to be good on social media.
Yeah, but Elon's so are people buying Teslas because they perceive them to be good for the environment, or are they buying them because they think they're cool and
they're
it's
fun to drive? I mean, I put my deposit down because they're just fun to drive. I like that they're good for the environment. I like the other factors. I like that they're innovative, groundbreaking. I like that they're coming from a man that has that vision and can show up on SNL and be funny. But they're fun to drive. They drive themselves.
I got a Chevy to pack up all my kids in and all their shit, but I could do karaoke in a Tesla. You like that?
Anyway, we're so far off subject. Let's open it up for Q&A because we're already over time. But I want to start off the Q&A with asking my favorite person to ask questions to, James Beatty. If you were in the audience, what would you ask our panelists today? What would be a good audience takeaway closer question?
Well, I think in terms of the things we've touched on, whether it's financial fiduciary values, ESG values in being visionary, et cetera, what do you think is the most important? Oh, and I value in the supply chain of dealers and issuers and investors. What do you think is the most important area of values? I have a feeling I know where some of these answers are going to go. What's the most important area of values in middle market finances right now?
Start with Sean.
I mean, I would think one of the things people would have to consider is changes in regulations, whether it's new tax policies, whether it's, I mean, there's so much happening that is up in the air right now that can really affect valuations and affect when people are interested in either selling their company or maybe acquiring. I think one has to really consider that when they're thinking the strategy over the next year or few years. But I mean, I'd love to hear what Mark's thoughts are.
No, I think you nailed it, Sean. That look, the government takes a large share of your earnings and your capital gains, and people try to figure out, you know, what can they do to manage that. So it's the capital gains tax.
Well put.
It's it's a big issue.
I think the values that come to mind is what I'm hearing and just talking to Mark and everybody is vision beyond the 3 year, because then if you have vision, then you like Jack Welch had vision. He wasn't just looking at the bottom line year to year, but he was looking at leadership training, right? Vision, and then fortitude. I think we're in a time where it's going to require brave entrepreneurs to make the tough decisions, like Elon Musk or other middle market companies do if they're going to move states to stay open, right? And remain productive to employ their employees and maintain stakeholder engagement with their customers, right? So I think vision and fortitude are the two values that middle market companies are going to need.
So Charles, I'd like to add some to that, and actually you had mentioned it earlier when you were talking about the transfer of wealth and you know, women outliving men and all these other things. Also the shift in dynamics. That's going to be a huge thing in the coming years, with a lot of people want to retire, who wants to take over those companies, who wants to do some of that work. There's, I mean, I'm gonna say that every time I have conversations, there's so much happening. And even what we're talking about today with ESG funds, what's the definition of that anyway? That seems to always be changing what that realm is. One day it's this, one day it's that. There's no set definition for it. And I mean, that's going to be changing a lot too. So I think everything's up in the air.
I agree with that.
Yeah. The world will continue to change, Sean. You're right.
And at a rapid pace. Well, James, answer your own question, and then we'll wrap it up because we are quite a bit over time.
Sustainability in all its dimensions is one of the most crucial values. Economic sustainability of the business, sustainability of your leadership and vision and market position. Ecological sustainability is, are you contributing as an enterprise, as an industry, to a richer planet rather than diminishing planet? So every different type of sustainability is important. But if you're not in business, you can't help direct where things are going in the future.
Bingo.
I think that's
All right,
a
well,
great way to end it.
Yeah, that's a perfect way to end it. Thank you, as always, for your questions. Thank you, Mark and Sean, for joining us today, and Charles and James for making time for our audience and our webinars. The audience for being here. We will send out everyone's contact info and a short clip of this after it's edited next week here. But cheers. We'll see you next week. Stay safe and healthy.
Thank you, Vanessa. Thanks,
Thank you for
Thanks,
having
Charles.
us. Thank
Thanks,
you.
Sean. Yep. Goodbye now.
Anytime.
Bye.
Cheers.